Hi, classmates. Cindy Strawbridge here, and I'm so excited to be here with you tonight to present my final presentation and to talk to you about my investment recommendation of the famous company Starbucks. So, one of the greatest love affairs of all time is between you and your coffee. That quote was so funny to me because the reality is that people are so in love with their coffee that oftentimes they are in a relationship. They can't live without their coffee. So what are we going to talk about during this presentation? My intentions is to cover the introduction of Starbucks. How did this company get started? We want to talk about Starbucks competition. Who are they? We want to talk about Starbucks financials and my investment recommendation. Now, I am by no means an accountant and I am by no means a financial guru. So, who is Starbucks and how did they get started? So here is the history. So three young lads got together, Jerry Baldwin, Zev Siegel, and Gordon Bowker. They got together, and what they had in common initially was academia and also the love of tea. But in the midst of talking, they found out that all three had a love for coffee, an absolutely strong love for coffee, so much so that they began to brainstorm how could they take what they were passionate about, how could they take what they loved and do something great. And so they got together, they had meeting after meeting, and they brainstormed. And after they brainstormed, they were able to launch their first store in 1971 in Seattle, Washington, their first ever Starbucks. And how did they come up with the name? Well, they got their name from the classic movie Moby Dick. I'm not quite sure how many of you are familiar, but that is a classic movie. But what I love about the history is that you had three young lads, three musketeers, the three amigos, right? But you had three young people that got together and they put their minds together. They had a dream, they had a vision, and 50 years later, they have over 31,000 stores. And while that is impressive, what's really more impressive to me is that they've been able to employ 349,000 people have a job because three young men had a passion and a vision. That is so impressive to me. So now that we've given the history, let's talk about their competition. Now we know McDonald's now have a coffee. We know Sheetz have coffee, Rutter's have coffee, Royal Farms have coffee. So there are a few other smaller competitors out there, but the main competitor of Starbucks is Dunkin' Donuts. So if you get to watch this presentation, I would love for you to drop on the discussion board, are you team Starbucks? Or are you team Dunkin'? Because as you know, Dunkin' has rebranded and they're no longer Dunkin' Donuts, but they are Dunkin', and their slogan is America runs on Dunkin'. So are you a Dunkin' lover or are you a Starbucks lover? Let's have a little friendly competition in the discussion post. Since this is our last class, it's all right to have a little fun and a little competition. So let me know if you're Team Dunkin' or Team Starbucks. So here's a fun fact for you. Dunkin' Donuts, believe it or not, was in existence 20 years ahead of Starbucks. You see from this graph that in 2009, Starbucks was behind tremendously in the locations that they had. And then you see in 2010, Dunkin' at that time was continuously growing. We see that in 2011, they were pretty much stable. And then in 2012 also stable, but something happened in 2013. They rebranded, they got a new CEO, and things took off for them. And they steadied and they steadied and they steadied, meaning they continued to be consistent and they grew across the board, which is wonderful. But here is what's so amazing. So we see from 2009 to 2013 that they continued to stay steady and they continued to grow. Dunkin' did, right? But then what happened? Guess what? As of today, right? And you're talking about that was 2013 and we're now in 2021, right? So you're looking at just 8 years later. As of today, at this very moment, Starbucks is the largest coffee house company in the world with 32,660 stores across the globe. Wow, is that not impressive? And so in 8 years, they have superseded Dunkin'. And here is where Dunkin' is today. They have more than 11,300 Dunkin' restaurants worldwide. And then that's over 8,500 restaurants in 41 states across the U.S. and over 3,200 international restaurants across 36 countries. So what I love about that is that when you looked at the previous graph that I just displayed, Starbucks appeared to be the underdog, but they have made a huge comeback. They've made a huge improvement, so much so that they are leading the trend and is known as the coffee house company, the largest in the world today. Let's take a look at some stock performance. So here you'll see a trend, and I went back as far as 2014 because I really wanted to see the trend, because as we know that there is a season with finances that things can go extremely well, and then there could be another season where things don't go so well. And so I didn't want to just base my research off of a year or two, because again, some years you're strong in your finance and then some years not so much, right? And so I went back as far as 2014, and as you could see that there was a little friendly, healthy competition between Dunkin' and Starbucks. There was kind of even playing. They were off a little bit here and there, but very close. And then we see in 2018, you will see that Starbucks then took the lead. Currently, the stocks for Dunkin' Donuts is selling for $58 a share. And then you have $105.20 a share for Starbucks. So next, I want to talk about a comparative analysis. So right now, the profit margin for Starbucks is at 9.22% and then 20.33% for Dunkin' Donuts. You have Starbucks at 107.3 for price to earning ratio, and then 106.48 price to earning ratio for Dunkin' Donuts. Or again, Dunkin'. A higher profit margin means that a company is more efficient at conveying sales and converting sales into actual profit. Both brands are doing an incredible job, but note that Dunkin' is doing better. But just because they're doing better here, does that mean that they are better overall? Oftentimes we take a snapshot and make it a movie. Well, you can't do that. You have to look at the entire picture. So a little more on the financial piece. The average cost for a Starbucks coffee beverage in Pennsylvania currently ranges about $4.37, give or take a few of what kind of coffee you get. Certainly the more treat you add, the more bells and whistles. Certainly the price is a little higher, but on average. Now, while that is expensive, when you look at coffee in comparison to what Dunkin' has, when you look at it in comparison to what McDonald's have, but here is what Starbucks offer. They give you quality. And so oftentimes what you pay for is quality, right? And so while Starbucks is high, they've been able to stay in business, do extremely well as they have done, but it's because they give you a quality product. And that makes the difference. And so as there's an old adage, you get what you pay for, right? So $4, while it is steep, you're getting a quality product. So here is some financial statements. And we see that here, we find that Starbucks with their revenue has done extremely well. 2018 was a major successful year. They certainly took a tank in 2019 and certainly in 2020. But as we all know, we've been faced with a pandemic, and that changed a lot of things financially for a lot of companies, not just Starbucks. A lot of us have had to pivot. We've had to change, right, with this remote environment. And so many people have not gone out. They didn't spend as much money as they normally would. So a lot of companies took a hit. Amazon, on the other hand, they surge. Why? Because everything with them is online. And so they have an edge on the market in that regard. But companies who were walk-in services that provide walk-in, a lot of them took a hit. Rightfully so, and we do understand that. Here's something I do want to point out though. 2020 debt to equity ratio for Starbucks was at 7. And where you really want that to be preferred is at about a 1 to 1.5. And so we see again here, although their revenue was great, certainly 2019 and 2020 really hurt them a little bit in terms of where they should be versus where they are currently. We see here with their stocks, there was a steady trend of going upward, right? And so when you look at that, you want a company that has longevity. You want a company that's improving. You want a company that is stable. You want a company that is a sound and a company that is in high demand. And Starbucks has been and continues to be in high demand. Again, did they take a little hit during the pandemic? Absolutely. But again, so did a lot of organizations. Starbucks strengths and their ratings was reported at 73. When you look at history, history reveals that the marketers' biggest winners tend to have an 80 or higher RS rating. And so again, we see that Starbucks is down, but although they're down, they're not out. And just for a little highlight feature, I created a SWOT analysis. So if you look, some of the strengths of Starbucks is profitable, and you want to invest in a company that's profitable. That's the number one key as an investor, is you want to make sure that you can yield a return on your investment. Global coffee brand with high reputation, and so they're worldwide known. They're everywhere. One of the Fortune top 100 companies. Who doesn't want to have that recognition underneath their belt? And their strong ethic values. And what is that? Bringing quality product with quality service. Now, some of their weakness, and we all have weaknesses, right? And so some of their weaknesses are innovation, sometimes have faltered over time. The presence in the US was so high, and sometimes that could be seen as a bad thing because then you're oversaturating the market, right? So you always want to be careful. It's good to be seen. It's good to be in every neighborhood, but if you're not careful, you're oversaturating the market. Here's opportunities. Good at taking advantage of opportunities. Everywhere there's an empty space, guess what they're doing? They're building a new Starbucks. That's opportunity. Retailing new products. You go in now, you have pound cake, you have cookies, they now have cup and merchandise. Guess what? They're building upon because they have to be innovative. They have to be able to stay afloat. And the best way you stay ahead of your competitor is by being innovative. And some of the threats, uncertain market growth. We could not have foresaw that there was going to be a global pandemic, right? Nobody could have predicted that. And so as a result, the market was affected. Those things do hurt a business. And in Starbucks' case, it did hurt Starbucks. The rise in the cost of coffee and daily products, another threat. And also competitors. We see again McDonald's that's now offering coffee. We see Sheetz that's offering coffee. Everywhere you go, Rutter's is offering coffee. Giant. So everywhere you go. And so now they have to be able to stay one step of their competitor. They have to be able to stay ahead to still stay in the number one spot. Now let's take a look at the annual operating revenue. You can see that in the year of 2017, there was a major increase, right? And that increase was 10.42%. So 24,720 is where they was. Then we see that in the year 2018 was another increase, 7.24%. From 26,000 to 509, you always want to have an increase. However, we see that there was a major decrease in the year of 2019. And as I continue to stress, as I continue to highlight, the pandemic affected Starbucks as well as many other organizations. So, let's talk a little bit about net income. Starbucks annual net income from 2020, there was a decline. We see that also their annual net income from 2019, again, a major decline. And then Starbucks annual income from 2018 was a significant increase. 2018 was a great year for the company. It was a year that was booming. And I suspect that 2019 would have been just as favorable, just as profitable if we did not experience a pandemic. And so I've given you a brief overview of all the financials that Starbucks has to offer that was very valuable. Now, certainly there is so much more to share, but I hope that I've given you enough that you understand that Starbucks is a company that is profitable. I want to read this quote that came from Kevin Johnston, the president and CEO. And this is what he had to say. I am very pleased with our strong finish to the fiscal 2020, underpinned by a faster than expected recovery in our two lead growth markets, the US and China. These results demonstrate the continued strength and relevance of our brand, the effectiveness of the action we've taken to adapt meaningful changes in consumers' behavior, and the extraordinary efforts of our Green Apron partners to serve our customers and community in challenging circumstances. So even in that, he acknowledged that there were some challenges. Even in that, he acknowledged nonetheless that it still relatively was a great year, and they are still excited about partnering with the community and to partner with those that believe in the company, believe in the vision and the mission. And here are just a few fun facts. 10% of U.S. membership increased for them. 480 net new score, yielding 4%. An ending period with 32,660 stores. So even though it was a rough year, all things considered, it wasn't a terrible year. So, what's my recommendation? My recommendation is simply this. There is no doubt in my mind that Starbucks is an absolutely amazing company. Anytime you can start with one store and 50 years later have 32,660 stores, that is impressive. Anytime you can employ 349,000 employees, that is impressive. So, are they a company worth investing in? My answer is yes, but not right now. And why not right now? Because of this right here. During the coronavirus, stock market crashed and Starbucks shares fell nearly 50% of their 52-week high. So because of the pandemic, because they fell nearly 50%, investing in them at this very moment would do an investor no good. However, I have confidence and I believe that they will make a comeback. I believe they have the product that we've seen that has worked and will continue to work as they continue to innovate and to pivot. So there is no doubt that this is a company to keep on your radar and to keep in your back pocket. Again, I am not an accountant guru by no means of the imagination, and I am certainly not a stockbroker. But based off of my research, Starbucks is worth investing in. just not right now. Thank you all so much for being with me and for allowing me to present to you all today. I hope that I shared something. I hope that I've given you the knowledge that you need to make a wise decision if you are thinking about investing in a Starbucks. This class has been a pleasure. It has been a journey. And I am 6 classes down and 6 more to go. Can we get a whoop whoop? So I'm excited about the next 6 classes. Thank you for being absolutely amazing classmates. I know that I've called on a few of you all to say, hey, have you figured this out? But I am walking away feeling confident, and just like Starbucks, even though they may have had some challenges, they have made a significant comeback. And I am so excited because at the beginning of this class, I was like, ow, balanced scorecard, ow! But I believe that as I finish this class, I am finishing strong. Just like Starbucks, I too have made a comeback. Thank you all. It's been a pleasure.